Well, here we go, another 100% return delivered on the YouTube channel. Unbelievable to see another one added to the list. And I think I remember last time we talked about Card Factory, which made a 100% return a few weeks ago. And we're talking about the amount of stocks now that I posted on this YouTube channel that have achieved a 100% return. It's unbelievable to see. And today we add another 100% return to the list, which is HIMS. HIMS reported earnings that we covered on the YouTube channel a few days ago. And the stock went absolutely ballistic off them earnings. And then it had another good day. It is taking a bit of a chill though today as recording this video, which is understandable because when you have had a stock price go a little bit crazy, it is probably makes sense to have a bit of a cooling off period. But the run that it has been on has pushed this stock for me into another 100% return. So we do have a new 100% return member added to the long list that we had last time, which is unbelievable. I think we struggled to fit it on the whiteboard. There was that many now, which is scary. But sorry there was no video yesterday on the YouTube channel. As you guys on the Patreon know, I've been making a lot of moves in the stock market at the moment. So I've been really focused on doing that, and it has basically mean that I've not had any time to do any videos. So I'm catching up. I'm going to catch up on the exclusive content on the Patreon. I'm catching up on the videos on the YouTube because it's been a really busy couple of days with everything that's been going on. So you guys on the Patreon know that moves that I've been making. Now, it's always good, I feel like, when we have a stock that has done very well and we make good amounts of money on a stock that goes up, to reflect on them stocks and go, what was key about this to achieve a 100% return, and what can we use going forward to make sure that I can share with you what helped me get 100% return and what I could do going forward to make 100% return. And it's same like when there's a mistake made and there's a stock that doesn't perform, I look back on that and go, okay, this is reason why this stock didn't perform, and what can I take going forward, and what can I share with you guys going forward. And we did that a few days ago or a few weeks ago with the TTCF and the mistakes that were made there. So it's a good point now to reflect on this stock that we made another 100% return on and go, what kind of worked out with this investment into HIMS and Hers, and how was it to achieve another 100% return. So the first one is to avoid fear. So you guys probably know in the last kind of 12 months, I would even say 18 months, it's been really hard to achieve good returns on the stock market because you just had a bear market, and the bear market's basically dragged everything down and everyone had a negative view on the market. That's what went on in the last few months, and you had to separate at the moment the fear from actually investing. There was a lot of fear because people were looking at share prices and judging companies on share prices going down, and you had to look back past the fear and actually stare behind these stock charts going down. There's businesses, and inside these businesses everything's going up. The profit, the path to profitability, the margins, the revenue, the sales, the products that they're launching, the customers that they're gaining. You've got to look past the fear and actually look at the stock price and think, is this a good opportunity? And you'll see that from HIMS and Hers, a stock that did absolutely amazing, there was fear out there. You would have seen 9 months ago, which isn't really that long, it's under a year. 9 months ago, I posted this video saying how good these earnings were. Now at the time, if you actually look, the share price was getting absolutely devastated, and it was down around $3.11. So this is actually when this video was posted. Now from there, the stock went up to return over 300%, which was absolutely amazing. So if you bought after I made that video, you know, obviously you did absolutely amazing. But at that time, even though we were saying all the fundamentals are strong, because the share price was down, people looked at that in fear. And for example, there was a post here from London FM that said growth stocks don't mean anything, profit is the key, and not staring at the fundamentals of the business. And he said that these growth stocks will not go anywhere anytime soon. Well, obviously, as you can see, within 9 months' time, this stock actually returned over 300%. And you had the likes of Andy Pickering, who said that this company just seems uninvestable. And actually, when you looked into the company, you're like, well, financially, they're obviously investable because every single metric inside the business is improving. Margins, profitability, revenue, the customers. And you're thinking, everything looks investable in here. But obviously, because people are sucked in because the share price was not doing very well, that was the fear of a stock price affecting people's judgment rather than actually looking at the fundamentals of the business. And that was the key thing, and leads on to the next point. When you're investing into a company, fundamentals are the key. You ignore the share prices, you look at the company. The company is key. You look at the valuation, you look at the company, and you stare at the metrics inside. 12 months ago, and this is why it's key to also know your stock, you've got to know what's going on inside that business. Unfortunately, you can have metrics, everything inside that business going up, but as what we've had in the last 12, 18 months, a lot of people turn around and just went, that business is absolutely trash because the share price is going down. But you've got to take you've got to break away from, okay, we're entering a tough economic environment, and some stocks have struggled in the economic environment. Heck, I've got a few stocks that have struggled in the economic environment. But the difference is when you look in that economic environment and you see some stocks deteriorating, you go, okay, I'm selling them businesses, I'm not buying them businesses. And you focus on, okay, because the whole market's getting dragged down, the sentiment's getting dragged down, a stock like Hims and Hers is getting dragged down because of the whole market's being dragged down. But if you stare at the fundamentals on the insides of the company, every single metric was ticking up. So surely, if that valuation is getting cheaper and cheaper and cheaper and cheaper, but all the metrics keep going up, going up, going up, going up, you want to be looking at the business, you want to know your company, know your stock, and you want to ignore the fear and focus on the fundamentals. And if the fundamentals are still improving, you want to be buying that stock, and that was really key with Hims and Hers. Now, the next thing is bull markets can turn around fast and turn stocks around fast. So for Hims and Hers, an example was that this stock had got so dragged down because of the bear market, and all we've had basically is a bit of positive sentiment come back into the market, and that little bit of positive sentiment shows you how much, the stock returns over 300% from that point in May. And that shows you what a little bit of positive sentiment can do. A negative sentiment shows you how quickly you think, oh, surely that stock can't go down because it's fundamentally doing amazing. And that stock can get dragged down because of just negative sentiment. No fault of its own, no fundamental deterioration inside the business. Just because there's a negative sentiment in the market, the stock drops 50%. And it's frustrating to see. But it happens. It happened with Hims and Hers. Hims and Hers got dragged down to really stupid prices because there was a negative sentiment and it didn't deserve it. But in the bull market, that's how quickly, like a little bit of positivity, and people look at this and go, well, surely this is ridiculously cheap. And you get a little bit of, bullish sentiment, and look how much that share price can lift it up. And it's a lot of stocks out there. It's very key to look at a lot of stocks and go, okay, if there was a bit more of a bullish sentiment, which will happen, some stock prices can get lifted up just because of that bullish sentiment, just because we're so negatively beaten down. And it's annoying that some stocks just fall with the sentiment and rise with the sentiment, but that's generally what can happen. And because we've had such a tough 12, 18 months, that's why we have had these opportunities. And there's still some stocks continue to be these opportunities because of the sentiment out here. And the last point is that from this one here, to learn from this 100% return at the moment, is exit plans still come key. We forgot about this because we've not had stocks go up for 12, 18 months. We forgot that, okay, stocks will eventually return if they're done well financially. Stocks will eventually go up on the share price. And something like Hims and Hers that's gone from $3 up to $12 within a couple of months, because you've got so used to just buying in a negative market, and that's what you've been focused on, it's very hard to actually remember that, actually in a few years, if they execute on these numbers, I'm actually going to have a stock that is going to be up and I'm going to make money on it. So like being up on a Hims and Hers actually then catches you out about having that exit plan. There was a massive chat on the Discord the other day about what you do now with Hims and Hers. Like, Hims and Hers is still going to be a $15 stock, a $20 stock. Or do you look at that now and go, actually I'm quite happy where this valuation is. Do you sell? Or what's your plan of like, I'm actually going to take a bit of capital off the table. The stock has shot up absolutely crazy in the last few months. I'm just going to take a little bit of profit on the table just because of how quickly it's gone up. And especially when you've got a share price that has risen so much in the last few days, and then today is having a bit of a cooling off period from those sort of earnings. It's very key to have a game plan so you know that when eventually we do get out of the rut that we've been in the last year and a half, you know what to do with your stocks when you do eventually have them turn around. And I think that actually caught a few people out as well in the last few days, just because of how quickly it gone up. And that's why it's also key to kind of write down what your projections are for revenue, profit, what you think the share price would be, what would you be happy to, potentially sell some position out, or potentially take some profit off the table. And that's something that also you might want to really consider as well when you can have some major reactions on the share price like this anyway. So I hope you enjoyed the video. Congratulations to all you Hims and Hers shareholders, and if you've been buying that $3 range, you are looking pretty good right now. So yeah, absolute wonderful business that's finally getting the recognition on the share price. So well done to you guys. Smash the like button. If you're new around here, subscribe. Catch you in a bit.